thank you very much for joining me today and our panel. We are discussing today, does liquidity bring users or do users bring liquidity? I think it's a very important topic we have to discuss, we have to address. And I think that's more even a broader crypto-wide topic we are discussing, but let's be very specific about Cardano and think more Cardano-centric today. Quick introduction to myself. Who am I? I'm the co-founder and CEO of Neum. We are fractionalizing music IP rights. But what do you see behind me? I'm also the initiator of 3UTXO. We would love to create a community-owned venture fund for Cardano, for the Cardano ecosystem only. And though I think that's very important to discuss the topic today about liquidity, because this is something we would love to tackle as well. But before we are diving into these difficult discussions and questions I have prepared, let's start with a very quick introduction round, because I think these gentlemen are very well prepared and they have the experience to talk and give us their thoughts about this topic. Yuri, why do you want to start?
Thank you, Florian. It's an honor to be here. My name is Yuri Brauner. I'm the CEO of Waffle Capital. Waffle Capital is a Cardano-focused DeFi yield farming fund, to be very precise. What we do is we basically go to high and ultra-high net worth individuals in Hong Kong, where we're based, and we pitch them the whole ADA story, as ADA is a good investment, as in a good ecosystem. And then what we do is we bring in fresh liquidity, fresh money, and buy the assets, and with that we start generating yield using all the DeFi product that have been coming up in Cardano. We've been doing it for the last 2 years. It's been quite a journey, and I'm looking forward to talk about liquidity and all the issues and the great things around the ecosystem.
Hello, I'm Jason Marshall, the Chief Operating Officer of Yellow Card Financial. Yellow Card operates a suite of B2B stablecoin-based payment services, especially cross-border payment services. We also operate a consumer centralized crypto exchange. Our area of focus is Africa. We operate in 20 sub-Saharan African countries.
Shall we go back to Senat? Give it another try, please.
Mic check.
Is the mic better? Is it? Okay, yeah, thank you.
Mic check.
Oh, so much better.
See myself. I can hear myself.
That means it works.
It means it works. Okay. Very nice to meet everyone. I was saying, Yuri, that was a very quick introduction. We have like 40 minutes, and I appreciate everyone being here. If you have friends or anyone you think might be interested in joining the panel, invite them. Even if it takes them 10 minutes to get here, we have enough time. I'm Senat. I'm currently leading the BD function at Thrive Protocol. My background is, actually I'm a social scientist by trade or by training. Got full-time into the space in 2021. I was very inspired by DAOs, frankly, and decentralization, decentralized governance. This whole idea of having a community with a shared vision and a shared goal, shared purpose, creating value together, and being able to do that, while actually being distributed on the entire planet was very intriguing to me. And I thought, the blockchain could enable us to get closer to that. I joined in Bankless DAO in 2021. Everyone who's like very familiar with Cardano and the Ethereum ecosystem might hate me now, but I plan on bridging here. Okay, we want to build bridges between ecosystems. But eventually ended up joining Thrive about 2 years in, because I saw the impact that we were creating together. And what Thrive specifically does is it helps allocating out capital to builders in the ecosystem, so whether developers, creators, or traders. We do that at scale. We have the technology to reward dozens, hundreds, or even thousands of projects at the same time. And the impact of that has been quite significant. And I can talk more about our impact later, but on a high level, that's what we do, that's what I do.
Oh, thank you. And last but not least, Vedran.
Yeah, hello everybody. People call me Vex. I'm CEO and founder of Revuto. And Revuto is a fintech product leveraging Web3 technology, in this case Cardano. We've been building on Cardano since 2021. We are one of the sponsors at this year's summit because we are just launching. We actually launched today debit card program with Visa within the European Economic Area and the UK. We plan to help people better manage their subscription payments by allowing them to leverage crypto assets, Cardano native assets, and Cardano DeFi to pay less to save money, I would say. I think that we have a great use case, a simple product, which is a mobile app, and our main task is, besides helping people save money and better manage their funds, to invite them to world of crypto, to grow Cardano's adoption through, again, a simple to use mobile app that makes people's lives easier.
Thank you so much. And with being through the introduction of everyone, I think we should come straight to the point with the first question. And anyone in the panel can take it. So the first one is really, what do you guys think? Is liquidity attracting users, or do users generate liquidity? What's the question of the main panelists? So jump straight into it. I think that's the most important question. So what's your thoughts?
I can be quick just because I have firm opinion about it. Money brings money, and I think the liquidity brings users. We all know when we list, even when the projects list with the DEXs, we provide initial liquidity because only that's how we attract new investors to provide more liquidity. The same goes with the sexes. The same goes with token sales. You know, we all try to get first big investors on board, VCs, whoever, to show others that, you know, there is a confirmation that we are building something meaningful. And for me, liquidity brings users. Although also users bring liquidity, of course.
I would have I somewhat agree, but perhaps a more nuanced view is that the way I look at it is that they sort of both go hand in hand in the same way that you need roads to have the cars, and you need the cars to have the roads, essentially. And so definitely what is important first is you need to create a market. And to create a market, you first need some users. But at the same time, you do need the liquidity, otherwise you still don't have the market. But you need the players inside the market. So obviously, this is the title of the panel, and the reason is a bit of a chicken and egg question. Both have to go hand in hand. If you only have one and not the other, you will face some difficulty over time. Vex is right that money does bring money. So perhaps I would say you need a bit of a small market, and then perhaps the second part would be to bring the liquidity. It's a bit like saying you build the first small roads and then you test the cars, and if you see it's working, you might as well build the highways so that you can accommodate more cars, let's say. But you do need the original cars. You know, you're not going to build the highway first.
Yeah, I mean, I totally agree, and I think you already mentioned the chicken and egg dilemma. And if there's one thing people can take away from this panel is you need both, of course, but what's almost a layer above that is what enables both, and I think it's community, right? When I joined the space full time in 2021, I joined also because I was freaking excited about belonging to a community of sort of like-minded people and building a better future. And the question is who has the liquidity and the users? It's the community. And I think a strong suit of Cardano is that they have such a shared, I mean, Cardano, the people at Cardano are all mostly aligned. I would say at least this is coming from like an outsider's perspective. But there's like still this deep belief in the token, and whoever believes in Cardano believes also in its future, I would say. And you need really aligned people to get the ball rolling. And once you get the ball rolling, it's all a question of timing and luck, frankly. If I think back on Ethereum Uniswap, and I think it was Compound, they brought in the liquidity and they implemented governance at the right time in order to actually make sure that this liquidity is properly facilitated and distributed. So with Voltaire coming up at Cardano, it might be actually the exact like moment in time where basically the pendulum is going to switch, and it's going to be very easy for liquidity to come in and also be managed and distributed.
Yeah, I think we often, if we believe in something, we'll provide seed liquidity. right? The initial start, the first mile of roads. But then ultimately, there has to be users who are trying to solve practical financial services problems to bring the liquidity. And if we see that coming, well, we'll find the liquidity, right? Because we're serving the needs of businesses and consumers to get something done.
Definitely. And
Are you sure about that? What about meme coins?
You know
They
what?
bring liquidity.
In our market in Africa, it's not about buying something and hoping it goes up in value. It's not about memes. It's about doing things that in my home country, the United States, I do with banks. So in Africa, everything we're doing here is solving a basic financial services problem in a better way than the current system and financial infrastructure can.
and I think I think that's very important. I think I'm very happy that we are all aligned of it, and I hope in the audience everyone is aligned with this. That we need liquidity. We believe liquidity is the key, but I think that's also the right dragway to the next question. That really is solving a problem and having maybe product market fit or user experience or utility in your product. Though there is, for me, the other question, it's more about the liquidity's role in adoption. Is liquidity so important if you have product market fit?
I would say it's a matter of timing, really. And then if I think about the Cardano ecosystem, we're at a point where we do have a substantial amount of users, and now is a time where the liquidity would be really needed to do what Vex was talking about, which is essentially money bringing more money, because the marketplace is already there. So it's a matter of timing. If you asked me 3 years ago, I would say it's not necessary, but right now we're at a point where it is becoming critical.
It's maybe not important, but it's an indicator, right? How do you know if you have product market fit? Well, if you are capable to get a new business and it's actually growing, then you know you're probably on the right track. And so I would say we'll see, right? Because at the end of the day, it's the people that drive the value to Cardano. And if there are enough people believing in the infrastructure that's already been built, well, they will stress test it. Right? There are a lot of protocols on Cardano. I think there are 34 active DeFi protocols. Revuto is one of them, and Yellow Card is one of them as well. And they have to be really battle tested. Things have to break, right? And for that to happen, attention needs to come to Cardano. And I don't think it's really a marketing issue. I think it's more of a perception issue. So how do people that are currently part of other, let's call them tribes in Web3, although I really don't like, I would love for us all to like come together and like literally make out more or less, literally build bridges.
Not gonna happen. Not gonna happen.
Well, it's all, so you create the world that you perceive. Yes. I literally perceive a world where we all party together and like break bread together. But I don't want to end. Yeah, this shouldn't look like U.S. and China at the end of the day, right? And for that to happen, people from the outside have, this bridge that essentially needs to be built with.
No.
Yeah.
Sorry for interrupting you, though, and that's a question I have not sent the panelists beforehand because it's just popping up, and we should spice up a little bit of things. Then, do you believe that liquidity is an indicator how healthy a project is? Because we are suddenly not talking about product market fit anymore, because this is the product to your end consumer, but the liquidity provided from your community towards your project. Is this an indicator of how good your
I'd say the opposite.
Okay.
When we found the best product market fit, and we're solving a real problem for a large group of businesses and consumers in a particular country or group of countries in Africa, we do have constraints in liquidity because demand's so high we struggle to meet it. And that's the best problem I've ever had in my 25 years in fintech, right? I'm having a hard time stocking the shelves, right? And that's a problem that there's plenty of sources of venture capital and other ways. That's a problem people will help you solve.
Yeah, definitely.
I can't grow fast enough to meet demand, and it's a temporary problem. And I think that's what we should strive for, right? we're struggling with liquidity because demand's growing so fast, right? That should be a goal.
Yeah,
Definitely.
that's a good thing to have.
Yeah. This is-
I have a bit different opinion because when we talk about the product market fit, I don't think that all crypto projects have product market fit. We are lacking that, and also when we are talking about the liquidity, if the users bring in liquidity, we have a different thing in crypto happening because we have token holders and users of the projects, and we are lacking users. We have speculants, they bet on tokens, but they're not necessarily users of those projects. We see that even with our own project, a lot of token holders and everything, but they don't necessarily care about actually our product or using the product, and that's the problem. And now we need to also bring in liquidity and use that liquidity to educate people to use our product. So, yeah, it's a complicated thing.
I think it's a very good point, talking about the different types of users. If you just have holders or active participants in your marketplace, um, that's all. I agree with that. There's nothing else really to add on that point. I would just say that in crypto, the way sometimes liquidity is not necessarily an indicator of how healthy you are. It's more an indicator of how you're being perceived in the marketplace. And so we can talk about how much liquidity FTX had on its books before it all went down, or supposedly had, right? So it's just a matter of perception. Markets are not always rational, and they're not always grounded in facts. So not necessarily, but it does drive the perception, let's put it this way. So if perception is a metric of healthiness, perhaps, but not necessarily healthy in the sense that products are used or market fit or safe to use.
Senat, you want to add something? Or? Because I saw your movement of your mic and so maybe.
I'll listen.
Okay. I think we're just a little bit over 20 minutes in, so just in the middle. I think there we agree it's about the sentiment of the market, and that might be just an indication for the outside world. Liquidity might be just an indication for the outside world that this ecosystem is healthy. But do we, just to bring it back a little bit and more focusing not on specific projects, but Cardano in total, do we believe there is a tipping point where we have now a community, especially here in Cardano, they are bringing already liquidity, and is there a tipping point when these community members, by providing liquidity, creating this marketing effect to attract more liquidity? Do you think there is a tipping point to this, and where do you believe in percentages such a tipping point would be?
I think we are at the tipping point. I mean, again, if I look back on the Ethereum ecosystem, and what really helped sort of spike everything was implementing governance at important protocols at the right time. It's literally what's happening here with the huge treasury unlock and basically entering the governance era. How exactly it's going to look like, whether it's going to mimic what happened in other sort of ecosystems, I don't know. I think no one knows that. However, there's going to be a lot of circulation happening within Cardano. And again, I love building bridges, not just roads. I hope we can lift all ties up.
I have very strong views about where we are, and I do believe we are at a tipping point. We're literally, to continue with the roads analogy, we're at a point where we've built enough roads and we've invested heavily in the roads, and now we need cars to kind of come in. So we're far from having traffic jam. We've basically a bit overbuilt the roads. There are more projects than chasing the amount of liquidity. So basically on the building side, we have everything we need. Again, it's like we've built the roads, the gas stations are there, and now you're waiting for traffic to come in, essentially. And so we're at a tipping point where that investment into the road has to pay off with traffic. And if that doesn't happen, I think we'll be in serious trouble. I'm not being pessimistic here, but I'm saying this is something we're seeing every day as a hedge fund.
Yeah. From a product perspective, building on Cardano, what's your thoughts about it?
I think it all starts with end user business and consumer problems. And those end users and consumers don't care about the tech or the plumbing, right? They just want the solution. They don't know how it works. They don't want to know how it works, right? They have to have a certain amount of trust and faith in whatever that end project is, and it has to work, all right? And I think we're still at a stage where we love the tech, right? But I think there's in 10, 20 years, 1% of the people dealing with the tech will understand the tech.
I cannot agree more on that one because Neum is also building a B2C product in the end. And yeah, that's also what we have seen there. Look, they don't want to know if it's built on AWS or Google Cloud. Though I think in the end, they don't just care. They want that the product is working. And I totally agree. In terms of liquidity, then, and before I go in this, Vex, do you want to add something from your product perspective?
Yeah, for instance, for our ecosystem, and that's a hot topic now in Cardano, stablecoins are very important. And I read a recent document from Anderson Horowitz about the crypto space. It was issued a few days ago, and they said stablecoins found the product market fit, in crypto. And people love actually to invest in stablecoins and earn yields, which are 6, 8, 10%, which is very, very competitive towards what they can get in traditional financial space. And they are putting money into stablecoins. And stablecoins are also big part of a DeFi setups where people earn yields. And I think that's important. In our product, we have like a feature called buy now, pay later, and we want to allow other users to provide liquidity into those liquidity pools, let's call them so. So users who don't have necessary funds on the due date to pay for subscription can borrow money, small loans from those pools. And for that setup to be sustainable, we need stable coins because we cannot let people put even ADA inside and depend on the volatility of the token. So I think those things are very important to talk about, not just this thing, also lending protocols, different, where people actually leverage their crypto assets to get loans in stable coins. And we like that in Cardano.
Yeah, I couldn't agree more. I read the same report, by the way. And what's another great indicator of product market fit for everyone? If the crypto market is going down, but the adoption of something increases, then this thing probably has product market fit. And actually, if you look at the adoption of stablecoins over time, as we sort of entered this bear cycle, it's been just going up. And I think Tether, USDC, they hold over 90.
Tesla 120.
Do you guys hear that?
Yep.
Okay. Yeah. It's 92 billion in US debt, and they basically help the dollar dominance, basically continue the dollar dominance, and so they're actually a great ally. And what I think this is super. What you mentioned is super crucial. Like innovating in the space, and we need to run experiments. And what I love about the
We can hear you.
Do you guys hear that?
Yeah,
we can hear you.
I mean, you can hear me, but my headphones are messed up. Sorry,
Okay, sorry.
I cannot hear myself anymore. I apologize for my mic issues. It's beyond my control. So that basically, what are the vehicles? What are the mechanisms that allow for builders to come in? And I remember when I joined Thrive 2 years ago, we started as a proof of concept. I was the 8th employee. We were like 40 people at some point. We're probably the fastest growing capital allocations protocol no one has ever heard of because we never had a salesperson, never had a marketing team. I was the first and only BDR. And we basically allowed builders to come in, build meaningful infrastructure dApps that are actually being then stress tested and used by users that we also incentivize to engage with these platforms. And so the impact of that has been in some other ecosystems which are out there, which would be actually great to see parallels in Cardano, is A, you're able to run way more experiments, you're able to innovate faster, and B, you're able to basically only reward what's valuable and sort of cut what doesn't work.
And just to bring it back a little bit, because if we all agree liquidity is an indicator of the health of an ecosystem, that we need liquidity, then do we believe that providing incentives for bringing in liquidity can bring not only mainstream adoption, but also bring sustainable liquidity to your project? Do we believe in incentivizing these kind of things?
Sometimes we need to look back and think of some of the universal rules of financial services do apply to this space. And incentives or disincentives have driven liquidity in finance since probably the first coins, right? What do we charge for interest rates,
Yeah.
right? What do we charge for loan rates? They go up and down as you need to move liquidity up and down, right? Central banks change the base rate to take liquidity in, to push liquidity out, right? That's universal. The same applies here. We may use different terms. We may not call it a central bank, reference interest rate, but that's really what it is,
Yeah.
right? And it's a toggle. If you think of a switch, I need more or less liquidity. You need to toggle more or less rewards. The challenge, what we have to make sure is that you don't toggle it past a level of sustainability.
I was just about to.
Because then you end up with short-lived
Yeah.
projects. But within those constraints of what's actually sustainable, right? It's a powerful tool.
Yeah.
The key is it has to be flexible. Central banks can change their rates pretty quickly, right? And we have to be that flexible as well.
I think I can think about growing an ecosystem. There are basically three layers. You have the incentive layer, you have a basically middle layer that I'll describe, and you have a BD layer on the top. The incentive layer is basically what we talk about, short-term liquidity incentives, which are running for, let's say, 6 months, drive vanity metrics, and then you can go to your VCs and say, hey, I did a great job. Once you turn off the vanity, once you turn off the incentives, everyone is gone, is actually looking for the next incentives. By the way, that's a big virus in the entire space. And I hope it won't, it drives a type of expectation which is very short term, and it's not good. It's I think a net negative. Then you have the BD layer on top, which is what Polygon actually did very well in 2022. We were hearing about all the big deals they were closing, and their BD team was praised, and they actually did a great job. So those are the long-term partnerships. Hedera actually does a great job on that too, which are supposed to flourish and yield returns long term. But then you have all this sort of middle layer of let's say small and medium-sized businesses and protocols and dApps that are in the ecosystem that are they're basically the backbone of the token economy. And if you look at traditional economies or the let's call it real world, they're present and they're being supported. In some political campaigns, they're one of the main issues. If I just look at Harris and her opportunity economy narrative, it's basically the backbone of her campaign.
Yeah.
We have none of that being talked about in our current space. So we have to figure out what are the vehicles that can make sure on one side that this middle layer is there and is present, because all of it is going to drive value back to the community, but the backbone is going to be that middle layer.
Yeah, definitely. Definitely agree on that one. Max, do you want also to talk about your experience in your own projects of driving liquidity, driving adoption maybe through it? Is this something what you use as a mechanism?
To get back to the topic of incentives, I think that we are all good with incentives in crypto, as you mentioned. But I wouldn't agree that that's not the case in traditional financial system as well, because we at least compare ourselves with Revolut or similar financial products where those guys are using funds from investors to buy new users, literally. They give you now 25 dollars or 50 euros to bring new people. And we do similar things, but with our own tokens. But the big difference is that many crypto projects are lacking sustainable business model. The token economy is not sustainable. It's easy to airdrop and everything and give away free money, basically. But then, how to, when there is no demand, no hype, how to create demand, basically. Fintech products are sustainable because they have business model, they earn on fees and something. We need to figure out how to make those things work.
I think for what you were mentioning about the token economics, I think there are deep pockets of liquidity. Just tell the users, if I give you an airdrop, there is at least something you can exchange for it. Though I think there is the security part of it, which suddenly liquidity is the major KPI for these kinds of things. Otherwise, if you drop something which is not on a DEX yet, has no liquidity, then what is the underlying value of this airdrop might be not even driving any new user to your platform.
Can ask the question whether airdrops themselves are valuable or just a vehicle to enrich the early people. Like, we've been running airdrop experiments for a long time, and they were at the start very exciting because all of a sudden you had like 5K in your wallet for using like a DeFi protocol. You were like, wow, that's amazing.
Everyone
I didn't
loves free
expect
money.
that 82 to 90% of those airdrops are being dropped off the market right away. So you have exit liquidity in form of an end user that has engaged with your protocol that you can like dump your tokens on, and that end user is dumping it on even like more ignorant people afterwards on the market. And it was nice. It was a great way to like create excitement and sort of hype in the space, but it's not sustainable.
I think there I absolutely agree. I also want to give Yuri, because he tried to chip in two times already.
Don't worry, you go ahead, go ahead.
No, go, please.
I was only going to add that it's very difficult to create something that is at the same time inclusive, sustainable, and competitive. Because you've got to deal with these three factors. You've got to deal with an inclusivity of all your token holders and a participation in the marketplace. And for that, you need to give them proper incentives, but proper incentive which is attractive enough for them and yet sustainable. And then you have a competitive environment, global environment, where if your competitor gives something that is more attractive yet not as sustainable, you might still lose some of your users and your liquidity. It's a very hard sweet spot to find.
And I think a lot of projects might agree to it. And what I'm seeing also from my end, being a founder by myself, suddenly having these tools of incentives for creating incentives for providing liquidity, you become kind of your own central bank, which makes it just even more complex. Though there is this additional layer of complexity to be a founder in the crypto space. Because in the normal Web 2.0 world, I would say you can purely focus on product market fit, on a good product, and do only this thing, and you will succeed. I think in crypto with tokens, you have an extra layer, and that's exactly what we are discussing today, a little bit about this liquidity and liquidity issue. For me, because we have still some minutes left, I would want to bring it back a little bit where we started. So we know already that it's more a circle what we are discussing, that liquidity is important, users are important. But because I have not received a really straightforward answer, do we really believe that if liquidity is high in an ecosystem, it will attract mainstream adoption?
I don't. You have to have a starter liquidity. You have to have enough to have confidence in your early adopters. But mainstream adoption has nothing to do with the protocols, liquidity, or any word that my 65-year-old aunt doesn't use.
Yeah.
Right? What mainstream adoption means to us in Africa, it's the pharmaceutical importer who has to pay a $300,000 invoice, goes to their bank, and they only have $100,000 for him.
Yeah.
And he figures another way to pay his overseas supplier, or he goes out of business.
Yeah.
That person, that's what we deal with every day. Those are the problems we solve. The friend of mine who bought a used car for $4,000, and the bank said you have to come into the branch, and that's going to be a 4-hour process to spend your own money,
Yeah.
$4,000 on a used car. So they asked the seller, "Can I pay you in crypto?" And they said yes.
Yeah.
Right? It's those. What's the problem, right? What problem are we solving? Not just incrementally better, but saving people 10% on a remittance flow.
Yeah.
Or 5% or 4% on an invoice payment, or music rights, or some of the other practical problems, a subscription, right? Like those mainstream users, they don't care about liquidity. But I'll tell you what, if we see a line of those mainstream users, there's conferences of people who will find a way to provide that liquidity, because we're all going to make money.
Yeah. I think so too. I think then we can turn the question more to the hedge fund guy over here, because if then the depth of the liquidity super important for financial institutions to come in to provide liquidity, because even if we find product market fit and we are growing, of course people might come in, but if the depth is not there in the beginning, there is a certain risk attached to it.
Yeah.
Though maybe that's more a question for you, Yuri. Do you believe the depth is very important? There is a critical mass of liquidity which has to be in the ecosystem before we see institutions coming in?
Well, it depends what you're aiming for. First of all, I'll echo what Jason said because that was an absolute brilliant answer. But then you have to think about timing again, which is at some point you're going to want, especially when you talk about DeFi, you're going to want the larger institutions to come in, and this is where the liquidity starts to matter, because if they see that there's not enough depth in the liquidity, that's definitely going to put them off, and so that's going to put them away. So it is very important to get the institution if that's your goal. Right, and if you're just trying to get something going and you're trying to get a marketplace going, a subscription, and all those things, that's not necessarily required. So I agree with Jason there. If you're trying to bring in larger institutions, which I believe we are trying to do in DeFi, then you're going to need a lot more liquidity, because those guys trade large volumes and they need that liquidity.
Yeah.
And they don't want to be someone else's exit liquidity. Understandable, they're professionals also.
Yeah. And also, I believe they don't, if they want to trade a position 5 to 10 or 20 million at once, they don't
That is
want
not
to,
doable.
They don't want to kill the market.
That is correct. That is correct.
Yeah, I would maybe just add, I mean, echoing everything that you guys have said, and add on that we need the people and the capabilities for them to build the infrastructure that is supposed to provide the liquidity. So again, the cars. I mean, basically, the whole purpose of liquidity is to be able to trade without slippage. So I want to make sure I can trade and I get like, you know, it's not going to change in price in the next 10 seconds based on what other people are trading. And so, but if you have people who are actually capable of building stuff and deploying to Cardano as well, at the same time while there are other people trading, that could be actually pretty powerful, because coming back to the market argument that Yuri made, which I think is really good, one of the foundations of all of that is a transparent market where I can actually have insights into where the pinpoints, where the pain points that need to be further developed.
Yeah,
I think of liquidity in some ways, like you were saying, almost a speed limit.
Yeah.
Right? So we can get to 10 miles an hour or 10 kilometers an hour. We can get to 30 kilometers an hour. But when you want to put the pedal to the metal, right, it's a timing. You may have to wait, right? You may have to be ready. Maybe you can't go from 30 to 100 at once.
Yeah.
Right.
And I think that's a really good comparison.
Fantastic analogy, actually.
Yeah,
that's where we are. We're at a stage where we have some cars and we're trying to get them to go faster, and now we realize the highways work, and now we could actually go faster. We just don't have the engines yet to get there.
Yeah. And I think just to do you have a different opinion, Vex?
I don't have a different opinion, but also I think that adoption is still a problem, because liquidity will come, more liquidity with higher adoption. We are still early. I still think that we didn't, on that curve of adoption, cross that chasm. I think that also user experience in general needs to improve to attract other people, because they don't care about protocols and technology and everything. They care about the products that are helping them in their lives, you know, saving money, making their lives easier. So yeah, I think that that's also something that we should work on, and to bring or attract more users and then more liquidity.
Yeah.
Can I have one call to action?
Yeah.
Get more people from outside of the ecosystem to come in. I'm really fascinated and inspired by the human capital within sort of the Cardano ecosystem. I've been having now regular conversations in the last, 6+ months with people who are like building all kinds of things, and I'm constantly inspired by the passion and the desire to change the world, which is, at the end of the day, when I think back of when I joined the space, part of the reason also why I joined the space. So the ability to make a change, the desire to do this with a community, and to like help basically make the world a better place. And I'm fairly convinced that you can't do this on your own. I don't know who said it. Well, it was, I think, a separate conversation I had. If you want to go fast, go alone. If you want to go
Far.
Sorry?
If you want to go far.
If you want to go far, go together. Thank you.
Yes.
And there's so much out there, so much stuff that's already been built outside of other ecosystems where, they're on Arbitrum, there's something called Stylus, which basically allows Rust developers to build applications that can be deployed on Arbitrum, which is a layer 3 on Ethereum, a layer 2 on Ethereum, which is great. And there's so much innovation and human capital also outside of the space. And if that comes together to sort of innovate and iterate together, I think it's going to be, some really exciting upcoming years in the Voltaire age.
I think I can just echo this. I think we are all here in Cardano passionate. The values of Cardano brought us here. This is why we are around even at the hard times. But I really quickly want to wrap it up because I just want to finish with what we discussed or what we came up with it in the beginning, because I believe it's a circle. And this is exactly what we discussed. We need product market fit. We need good products. We need good DApps. But also we need liquidity. It will attract on both sides. And if we have a lot of time, you can do only one at a time. And it might take longer. But if we do it everything parallel, because people will focus on different stuff, we just grow as an ecosystem so much quicker. And though I believe still liquidity is super important personally, I think the panel does believe it in it as well, but also product market fit of products. And I think also Senat will agree, create value for the ecosystem is key. And this is exactly what we are all up for and what we want to do. And with the last 3 seconds, I want to thank everyone who was listening in. It was a pleasure. And I hope next time we see you all again. And I want to thank my panelists for being here with me to discuss this very controversial and sometimes not so comfortable topic. Thank you so much, everyone.
Thank you.